Investment platforms, such as Etoro and Sarwa, offer a range of services, including the ability to invest in stocks, ETFs, and crypto. Sarwa, in particular, provides a savings account with a potential annual return of up to 4.5%, although this comes with a 0.5% annual fee, resulting in a net gain of 4% per year. This savings account is backed by the Dubai International Financial Center. In terms of trading fees, Sarwa charges either $1 per trade or 0.25% of the order amount, whichever is higher, and a 0.75% spread on crypto trades. These fees are generally more favorable than those found on Etoro. Etoro, on the other hand, offers a broader range of markets, including commodities and currencies, but with higher fees, such as 1% on crypto trades. Both platforms have a social aspect, allowing users to engage in copy trading, where they can replicate the portfolios of expert traders. However, Etoro offers this feature for free, whereas Sarwa charges a monthly fee of $7 or an annual fee of 1.3 to 1.5%. Etoro's social features also include access to analyst opinions on individual stocks, as well as the ability to discover and copy top traders. The platform's smart portfolios are similar to Sarwa's expert-built portfolios, offering users a range of pre-built investment options. Ultimately, the choice between Etoro and Sarwa depends on individual needs and preferences. For those seeking a social trading platform with a wide range of markets and features, Etoro may be the better option. However, for those prioritizing low fees and a savings account, Sarwa is likely the more attractive choice. Despite its $500 minimum requirement for the savings account, Sarwa's lower fees make it an appealing option for many investors. Although Etoro's unique features and broader market access may still make it a viable choice for some.